Welcome to The Explainer. Today, we're looking at a new crypto project that has a lot of people talking, and for a really interesting reason. There's this fascinating contradiction at its core. On one side, it looks like a can't-miss opportunity, but on the other, there's a pretty powerful history working against it.
Okay, so let's get right into it. On the one hand, Puffer Finance has just pulled in a massive amount of capital. Its total value locked, or TVL, that's all the assets users have deposited, has soared past $1 billion. That shows a pretty incredible level of trust and adoption right out of the gate.
But, and here's the crazy part, its own market cap, the total value of all its tokens, is just a tiny fraction of that, sitting around $78 million. I mean, that is a huge gap. So, what's the deal here? Is this a massive hidden gem or a major red flag? Well, let's break it all down.
To really get what Puffer is all about, we've got to understand the tech it's built on. And it all starts with a concept that's been changing the game in crypto: liquid staking.
You see, traditionally, when you stake your crypto, let's say your Ethereum, to earn rewards, it's locked up, gone. You can't use it for anything else. Liquid staking completely flips that on its head. It gives you a liquid token back. Think of it like a claim check or a receipt that proves you own the staked assets. You can then trade that receipt or use it in other apps, all while you're still earning your original staking rewards. It's pretty brilliant.
So, this move from locked to liquid is all about making your money work harder for you. It's about capital efficiency. Instead of your assets just sitting in one place, doing one job, they're suddenly out there working for you in multiple places at the same time. And Puffer, well, Puffer takes this awesome idea and kicks it up another notch with something called restaking.
The whole process with Puffer is designed to squeeze out as much reward as possible for you, and you don't have to lift a finger. You stake your ETH, you get that Puff ETH token back just like usual. But then, in the background, Puffer takes your original ETH and puts it to work again on other platforms like EigenLayer. So now you're earning multiple layers of yield from that same initial deposit.
Okay, so that brings us to the big question. Why is this model getting people so excited? Why did over $1 billion pour into this thing?
Some analysts are, let's just say, extremely bullish. They're looking at Puffer like it's a massive undervalued opportunity. And they're pointing to a few key reasons why they think this thing has explosive potential.
So the case for Puffer really stands on three main legs. First, that low market cap we talked about. To an investor, that just screams room to grow. Second, you've got that sky-high TVL, which is basically a giant vote of confidence from the community. And finally, the tokenomics are pretty smart. The big early investors, their tokens are locked up for a whole year, which means they can't just dump on the market right away. That should really help stabilize the price early on.
But, the tech and the numbers are only half the picture. For a lot of people, the real story, the thing that gives them confidence, is who's writing the checks.
Yeah, Puffer hasn't just gotten the attention of regular users. It's gotten serious financial backing from some of the heaviest hitters and top-tier venture capital firms in the entire space. I mean, just look at this list. It's like a wall of credibility. When you see the investment arms of the world's biggest exchanges, Binance, Coinbase, plus a huge traditional finance player like Franklin Templeton, well, that's a massive signal. It tells you that some of the smartest money out there has looked at this thing and believes it has a real future.
Okay, but every story has two sides, right? Let's bring things back down to earth with a healthy dose of reality. No project in crypto is a sure thing, and it's absolutely crucial to understand the potential downsides here. So these are the main worries analysts are flagging. First, the project is brand new. There's just not much of a track record to go on. Second, the price could swing wildly. That's just part of the deal with new, low-cap tokens. And third, it's not alone. It's got some tough competition. But honestly, the biggest question mark hanging over its head is a historical one.
And this is the critical counter-argument. One of our sources put it perfectly. Despite the cool tech and the billion-dollar TVL, similar protocols in the past have really struggled to see their own token price go up. Often, all the value just flows to the underlying asset like Ethereum, instead of to the protocol's own governance token, and that's a major headwind.
Which brings us full circle right back to where we started, staring at this central puzzle that is Puffer Finance.
So what's the takeaway here? Puffer is really a classic crypto dilemma. On one side, you've got amazing tech, backing from the absolute biggest names in the business, and just incredible early adoption. But on the other side, you've got this ghost of the past, a history where similar tokens just haven't performed. So the ultimate question the market has to answer is this. Are Puffer's advantages, its backers, its incredible start, are they enough to finally write a different story and break that trend?